It is January 6th. Michael Vaughn with Brian Acker, and we begin 2016, and the screen's all red. What's happening here?
Look, there's a lot of, I have to admit, even for myself, I get a little anxiety when I hear certainly the headline news and what the press are certainly pumping out.
Well, the Chinese scared everyone to death.
Well, and again, but when I go back to our work, when I actually, that everyone can see on Facebook, when I actually look at companies, when I actually look at their model price work and what the things are worth, my anxiety just floats away. So
Oh, good. Then mine too.
yeah, so I mean, I think we're in this period of time between year end and first quarter earnings. They're going to start another week and a half. So then the market will get to focus on earnings and something relevant, as opposed to we're caught in this vacuum of unfortunately, there's not much news.
Well, the job numbers were terrific.
The job numbers out this morning is one item. 275,000 ADP reported private payrolls. Now, again, if we keep on going at these levels till June, let's say, the U.S. is at full employment.
Wow.
So, I mean, they're going to have to start taking those 50-something older people and get them back in the workforce because they're going to run out of people, and that's very good news for Canada, by the way. That's another, yeah. So anyway, look, the U.S. is humping along. We actually had a rate hike in December.
Yes.
I think with these certainly employment numbers, you're going to get more rate hikes in 2016, probably 3 more. So again, all this is good news only because I think we're at that point where the U.S. dollar, if it starts going up appreciably from where it is now, it's at around 100 on the dollar index. What happens is there's a multiplier or a reflexive benefit to the U.S. economy. In other words, money will come pouring in, dollar assets will go higher, and that will be good for the U.S. economy, and I think their growth estimates will certainly come in higher than what people think. So,
meanwhile, the loonie is sitting at 60 cents. I mean, doesn't that take us down?
No. Well, we're at 70.5 cents today,
yeah.
But I think we're at the low. We're getting close to the low. Now, we may see a high 6 print, 69, 68 cents, as people are basically selling emerging market assets and certainly going elsewhere. But let me remind people, back in 2002, I had roundtables, etc., when we called the bottom on the Canadian dollar. Not only that, we converted all our accounts from US dollars at 68 cents Canadian, and we predicted at the time that the Canadian dollar would actually be at par and over par. So we're not there yet, but I'll tell you, Canada looks more and more interesting as valuations, certainly in the currency, certainly in the in terms of stock prices, starting to look very, very attractive. Again, we're not there yet, but we will. But look, the engine that will push Canada, certainly Ontario and Quebec, will be the U.S. And as I say, once they start ramping up, we'll be the beneficiaries of that. And I don't think the world has actually caught on to that. So, again, we're viewed as the commodity currency, like everybody else in that particular basket. But again, we could be U.S. light here, and people will shift their perceptions on Canada. And I think that'd be, it sets up for Canada to be a pretty good place to invest, certainly at the bottom for the next 3 to 5 years. But we have to get there first.
To get there first, that's right. So we could stumble along like this for 6 months, a year, 2 years, how long till?
Absolutely, but but again, we're already seeing signs of U.S. companies coming
Yes.
into certainly Southern Ontario. But again, from our point of view, I mean, the infrastructure is not there. It has to be rebuilt. That just takes a little bit of time. So just, patience.
And the headlines today aren't keeping you up all night.
Look, a lot of the headlines are going on what's going on in China. So
Yeah.
China has to manage through one of the most difficult processes from taking a country of an investment-led country to a consumer-led. So and they're going to do it in a way, all their tools, both monetary and fiscally, for them to maneuver. And all the other central banks in the world, it's to our benefit that they're successful at that. So, look, but at the end of the day, there are some real potential areas, Canada being one, and I think still the U.S. Is the other, of making significant rates of return in 2016. Now, you're not going to read that anywhere. So again, just for Acker Finley clients and those who watch the video, there's some interesting things going on, and I wouldn't get too pessimistic.
I'm feeling better already. You're always so insightful. Thank you for the time, Brian. I'll see you in February.
Michael, always a pleasure. Thank you.